Welcome to the Money and Finance for Expats podcast. It is the 5th of December 2022. Let's bring on the experts from Fiduciary Wealth Management. That'll be Paul Correa and Matt. Matt, how are you today?
Really good, Carl. Very good. Still enjoying England's win yesterday as well.
Oh, yes.
It was a one to celebrate as well. So I'm sure some expats watching enjoyed that as well.
A shaky first start, I think, there, first half, and some cracking goals in the second half.
They were all in control. Nothing to worry about, Carl.
You say that now.
Paul, yeah, it's easy to say afterwards, yeah.
Paul, what about you? How you doing?
I'm doing very well. I thought the match was, it was dangerous in the first half. I think Senegal were putting in a high press quite successfully. They were putting, but I think England passed the ball very comfortably, and they were just retaining possession and tiring them up. And on the counter, they were brutal. You know, Bellingham and Liverpool players in particular, Henderson was amazing. I mean,
sounds like you had a great weekend, the pair of you.
The only thing, Cole, I'm quite worried, and this actually ties into our podcast quite nicely because we're talking to expats now and expats ourselves, and if we look at the draw, the French may be coming up, and then possibly Spain or Portugal. I mean, Spain could be a big problem for me. I imagine, Carl, Portugal could be a big problem for you as well. So, there might be.
Yeah. Absolutely right. Yeah. Well, it's exciting nonetheless, and I'm wondering if it's a useful metaphor for the money markets at the moment. Does it echo and reflect what's going on? After I'll play this clip shortly. You talked about the end game. We're approaching the end game, Paul. Can we go to a bit of insight and analysis from you? And we welcome people who are tuned in. We know people are watching this morning. Thank you for watching us live. If you've got any questions, do stick them into the comments, and Paul and Matt will address those. Our special focus today is about the process of relocation. And I want to bring into that this whole business of many more people on the move, the digital nomads, and how they might plan for their financial future as well, and whether you can help them. But we're going to be talking about the process of relocation. Obviously, your focus is on the Iberian Peninsula. But before we go to that, how's it looking? Are we ever closer to this end game that you mentioned last week, Paul?
It's very hard to say. You can't really put a timeline to it. That is the truth. But we've seen in Q3, I think I mentioned it in the last program, the central banks are racking up their gold reserves at a phenomenal rate, highest since 1967. And that leaves some clues as to where we're heading. I mean, there must be an underlying reason why they are shifting their reserves into gold. We've seen the gold price really strongly supported last week. Silver, for that matter, they've gone. Would that be fair to say? They were pretty strong last week, significantly higher. We saw the Federal Reserve Chairman openly state for the first time that they would slow the pace of rate increases. I think the strongest indication yet that we'll see a pivot. We saw the 10-year US Treasury plummet. I mean, it peaked a couple of weeks ago at 4.3 or something similar, and it's broken through 3.5%. So the market is already sensing some blood here, and they are expecting the Federal Reserve to capitulate and to start slowing down the pace of increases. Look, I mean, Jerome Powell, the Fed chairman, was quite ambiguous. He said a bit of everything to everyone. On the one hand, they still had to increase rates a bit more. Possibly the end game is 5% at Fed funds rate at 5, which is just 1% higher than it is now, and that they will have to keep it rates higher for longer. So that's on the one hand to try and show some teeth that they're still trying to fight inflation. But on the other hand, he was saying, the end game is near. Rate hikes up to 5. Future rate hikes are going to be smaller, and making the kind of noises that the market's expected for a long time. And and as a result of that, we've seen precious metal prices flying. But look, I've said it for a long time now. There's been an underinvestment in gold and silver mining for the last, since the last commodity cycle rally, which ended in 2011. There's been an underinvestment in gold production and silver production. We've got inflation raging. We've got uncertainty. We've got wars. Now we've got the Federal Reserve backpedaling on the rate hikes. We see the dollar collapsing, which I think I mentioned in another episode, that the dollar was the elephant in the room. What is happening now, right? Dollar sterling was 110. It's 122 as we speak. So everything is happening. So I think, we will see a strong rally of not just gold and silver, but commodities more generally. I think the only downside right now is China. And they've had their own lockdowns, and they are heavy consumers of all kinds of commodities to stimulate their very aggressive growth plans. So they consume all kinds of commodities, whether it's aluminium and steel and nickel, so on and so forth. So, a general slowdown in China would be negative for industrial commodities. But no, I think we may have seen a turning point.
Okay, and still true to say then, there wasn't a saying, wasn't there? When America sneezes, the world catches a cold. That's still where we're at.
We're still heavily dependent on the US, whether we like it or not.
Yeah.
The US economy continues to be the engine of growth for the globe, and that's why I keep focusing on the US economy.
Yeah.
Because regardless of what's happening globally, I think the US economy is a good barometer for the health of the global economy, and a slowdown in the US would spill over to other markets anyway.
Right. Okay, thank you very much for that. I think maybe your headphone cable is rubbing against your desk there, Paul. Which could
Sorry.
No, it's okay. It's just it might make it a little bit easier on the ear. So thank you for adjusting that. Really appreciate it. So let me just play a clip from last week then, and then we'll get into the whole business of relocation. This is something that you said last week, Paul, and we will take segments like this from all the podcasts and share them for people's opinions who may be tuned in and for their input. I noticed a little bit of a rally for Bitcoin as well. Those tuned in might want to. It's quite a good conversation starter, isn't it? The Bitcoin temperature. But this is what you said last week.
No, I think what we're seeing is what we expected. There's every indication now from Federal Reserve Reserve governors. They're making noises that they're going to pivot. If not pivot and reduce rates, certainly pause or make smaller rate increases. Okay. So the market is taking that very positively and maybe misinterpreting it as a capitulation on the part of the Fed, and maybe undoing some of the damage of the higher rates. And I think it's still early days. We should expect another rate increase, admittedly a smaller one next month, and possibly one in Q1 2023. Okay. But I think we're getting to the end game. And the end game is that the US government cannot afford to pay so much in dead interest.
And there, of course, are details for getting in touch with Fiduciary Wealth Management. It'd be interesting to look at these in a few weeks and months, Paul.
Yeah, I think my explanation last time was a bit convoluted and I wasn't on best form. But basically, I think I've summed it up a bit better this time around. Yeah, I think, rates will increase slightly to possibly to 5. They might stay there for a while. But I think in terms of rate increases, I think there's every sign now that we're getting to the end, and thereafter it's all about rate cuts, maybe towards the end of 2023. But the markets are already smelling blood.
That looks to me like our soundbite of the week. The markets are smelling blood. Okay. Thank you for that. What do you think? We know people are tuned in. What do you think? Do let us know in the comments. Let's talk now about relocation, which, of course, Fiduciary Wealth Management, based in Gibraltar, can help people with. Matt, I think you have a key message here when it comes to helping people with relocation from your experience in helping people do exactly that.
Yeah, no, absolutely. I mean, we're the Money and Finance for Expats podcast, but I think we could have extended that, money and finance with relocation assistance for expats or those who are moving, but it's not quite as catchy, is it, Carl? So, that's why we've gone for that. But no, I mean, we like to engage with people before they move. And the reason for that is never too early to start planning. That's very important. And we've said it before, and we'll say it again. We have so many experience of people we talk to, and they say, okay, I'm in Gibraltar now, I'm in Portugal now, I'm in Spain, or wherever they've chosen. Let's review my finances. And of course, we can help those people. More than happy to help them, but there's a lot of planning that they can do before they move. We use a bit of an example here, actually, and we talk a lot about people's UK pensions. In the UK, someone can take their tax-free lump sum. It's 25% tax-free, great. If you're living in, say, Portugal or Spain, they don't recognize that tax-free element of it. So you can still take that 25% from your pension pot, but it's not tax-free in Portugal and Spain. They will tax that. Now, it might be a different tax rate, depending on your circumstances, depending on if you're using NHR in Portugal. But I think there's a kind of key difference there. And if somebody's already relocated, then they've effectively lost that 25% tax-free lump sum. So it's just one very small example of how, if that person engaged with us before they moved, there's a lot of money they can save.
Yeah.
There's a lot of opportunities for expats. And again, people think, okay, once I'm there, I can start taking advantage of these. No, you can start doing that as long as you're serious about relocating as you start to move. So yeah, I mean, that's key to us. You need to plan early, and it's not just about the finances. Nowadays, we may need to look at things like visas, insurance, protection, loads of other things, but plan early, get your ducks lined up. I'm gonna steal something Paul always says, but it's true. It's better to be the tortoise rather than the hare. That's key in this sort of situation. Steady progress, think about what you're doing, and I think that's really key.
Slow and steady wins the race then.
Exactly, yeah.
Okay, and how early is early? I mean, because another thing I wanted to bring into the conversation was we're seeing the rise, certainly here in Portugal where I live, the digital nomad visa is really popular, and it's encouraging more people to come here. I think it's encouraging the idea of not being based in one place like people used to be back in the day. People are perennial nomads now, aren't they? Moving on to the next most advantageous place. So should people start talking to you straight away? And if they are one of these people who are perpetually moving, what sort of things should they bear in mind whilst making those sort of choices, as well as the nicest cafes to work in with the most days of sunshine? What financial considerations should they be making before they move here or there?
I think they really need to be considering everything, Carl, to be honest. I don't think it's a case of we can say, okay, just focus on this or not. But you're right, people are in a position now where we can work from almost anywhere. That's if your employer allows it, which is probably the first step that you need to do if you're employed. But I think it's important to kind of consider what your plan is long term as well. Because I'm sure you see people who relocate to Portugal and that's their intended home for the rest of their life. Or you have people who might go to Portugal and then think, right, I'm going to do a year here, then a year there, then a year somewhere else. So the sort of planning for person A in that scenario compared to person B is completely different. But they need to consider the taxation in their new environment, what to do with their investments, their pensions, and there's a lot more considered. So you need a real kind of financial plan that considers everything.
It's very difficult. It's very difficult to give tax advice to a nomad who's hopping from one country to the next.
Okay.
Because every time they hop, you have to restructure their affairs to make them tax efficient, and probably that's not our market. I mean, we are looking at predominantly entrepreneurs, senior executives, and retirees that want to move to another location with intention of staying there permanently, or for a period of time, and a non-habitual residency. Um, so it's yeah.
So that's interesting.
Matt is right. I mean,
In,
it's a different
in,
a different planning that goes with digital nomads than with our typical retirees. And
But in its own way, that's really good advice, isn't it? Because whilst that may seem like a very attractive lifestyle, and I picked up this question recently, but because you've been living in multiple countries, are you able to put money into a retirement program? That's basically what people are asking. That's the nub of this question. But are you suggesting then that it might, instead of like hopping here and there and going to a different country every year or 2 years, it might be good to go on holiday and work in countries and keep your nationality, keep your what would it call, your domicile financial status in one place, and not to keep hopping around? Would that be a useful conversation to have with you?
well, I think domicile and residency are two different concepts.
Oh, okay. Could you explain that for my bad, please? For the benefit of others, please tell me.
No. For the UK, domicile is a concept which is applicable in countries like the UK and Ireland, and basically it's based on your where your father is born. So you take your domicile of origin from where your father has been born.
Okay.
So domicile was one thing. Tax residency, completely separate matter. You can be
Yes.
UK domiciled when
Yes.
you leave the UK and still become tax residency in a third country.
And that is
So
specifically a UK thing, is it?
yeah, so it's a UK thing. So
Right.
your UK domicile is difficult to shed. You can have a domicile of choice if you wish, but it's not so easy to shed your domicile of origin, which is
Okay.
taken
All
from your father where he's born.
right. Okay.
So, I mean, if someone is traveling around and they are Brits, it depends on how much time they spend in that country in terms of their tax residency.
Yes, yeah, and again, that's a useful conversation to have, isn't it? Rather than find that out in 2 years' time, it is worth finding out now what the
But
implications might be if you were to do
co-
something like that.
correct, but in answer to the question that showed that was displayed on your screen, you can have an international pension plan set up that allows you to travel extensively and save in the country where you're tax resident. Yeah.
Oh, okay. Can you say more about that? That's this question here, isn't it?
Yeah, there's a possibility of setting up an international pension plan
Okay.
that allows you to save money. It doesn't
Yes.
necessarily, it's not necessarily tax efficient in terms of being the contributions being tax relieved. It might not be because you're moving around, but
Yes.
you can still save money and build up a retirement pot over time, regardless of which countries you work in during your working life.
Okay, and this is a tension we will feel on the Money and Finance for Expats podcast, because people want to ask you questions that aren't necessarily Iberian Peninsula located. But I understand, you know, you trade on your specialism and your niche, don't you? You wouldn't be much use to your customers if you did everything for everybody. That's not how niches work. But if inevitably we'll be drawn and asked questions about how you know the how money, finance, and wealth are dealt with in various parts of the world. So I hope you can indulge those sorts of questions as well.
Can I just add to what Matt said earlier about the importance of planning beforehand?
Yeah,
And
sure.
he gave a very good example of the tax-free lump sum on UK pensions. Yeah,
Mm.
that is no longer tax-free when you move to a country like Spain or Portugal. I could recite another example,
Please do.
and a Brit that is exiting the UK. He's got his main residence in the UK, which is intending to sell to finance either his retirement or his retirement and the acquisition of a property in his new country of residence. Let's
Mm.
say it's Portugal or Spain. Um, you have to be aware of how non-resident capital gains tax rules apply in the UK. What exemptions are in place? When do you sell your property? To make sure that those exemptions stick even after you've left. So what do you sell the property before you left, or within a window of opportunity? So there's no capital gains tax on the sale of that property.
Yeah.
Little things like that, which can be completely overlooked, but can result in considerable tax savings.
Yes, very good. Okay, so we've touched on taxation, we've touched on capital gains tax and the sale of a housing asset. What other considerations are there? I mean, wills, I would have thought, and inheritance are very important issues that you would review for people as well. Is that right, Matt?
Yeah, no, I mean, wills is an interesting one people need to take into consideration, because the rules of heirship may be different in your new country as well.
Yes.
Which you may know in Portugal and Spain, they have kind of forced heirship, which kind of can dictate who your wealth is passed to. And there's many things to consider, and just to kind of add to what Paul was saying about kind of selling your UK property as well. You've got to consider exactly what Paul said about the UK side and those exemptions. But you've also got to consider the side of the new country that you're in as well. So you've had your main residence in the UK for some time, and then you move to Spain, and then a couple of years later, then you want to sell that property. You've potentially got a tax liability in the UK. You've got a potentially huge tax liability on the sale of that property in Spain as well, even though you own that property when you're in the UK. So you've got to consider both sides. That's I think that's a really important point. It's not about, okay, I now live in Portugal, what happens in Portugal? Oh, I'm a Brit, what happens in the UK? No, you need to understand both, and that's where it gets complicated. And I guess that's where we come into the equation.
And you'll go into the long grass with people on these matters. So, I mean, in essence, it's not just a matter of chasing the sun and finding out the best circumstances, because if you don't make the right decisions whilst you're doing that and planning that, you could find yourself quite unhappy in a nice sunny country, having lost out on some serious benefits.
I think Matt has touched on a very important point about understanding the nuances and the differences between the two tax regimes. And just to give you an example, when it comes to inheritance tax, as I mentioned earlier, your inheritance tax liability in the UK is based on the concept of UK domicile, and not tax residency. In Napoleonic law countries like Spain, Portugal, France, Italy, inheritance tax or succession tax is based on the concept of tax residency.
Yeah.
If you look at the double taxation treaty between the UK and Spain, for instance, covering a number of areas of taxation, it is silent on the issue of inheritance tax. So, because the double taxation treaty is silent on that particular area of taxation, it means potentially you could be liable for tax in Spain based on tax residency, and liable in the UK based on the concept of UK domicile. Yes, they might give you some credit tax relief. They might, but it's terribly complicated.
Yes,
they might not. And for Brits leaving the British Isles, they always have to consider first and foremost that they are UK domiciled in all probability, and therefore they are likely to remain potentially liable to UK inheritance tax, and therefore they should commence this journey protecting that one area of their finances, which is, how do they protect their estate from UK inheritance tax, as well as from succession tax in the country of the new country of residence.
And that's perhaps the biggest area of concern, isn't it? Because it's likely to represent the biggest transfer of wealth apart from an investment fund. But that's a serious amount of money we could be talking about there.
Absolutely,
yeah,
considerable amount of money.
Okay.
And you start looking at your inheritance tax, the sale of your main residence, which could be a pretty large amount.
Yes.
And how do you exempt yourself from non-resident capital gains tax? And what is the window of opportunity? And you identify, 3 to 5 areas. Matt mentioned the tax-free lump sum and UK pensions. And you start looking at the nitty-gritty, yeah? and the areas where taxation can reduce your net worth. And with good advice, the tax savings could be considerable.
Yes.
And people sometimes want to take cut corners, save money, not get the advice, and then go online and trying to understand how it all works, and then find out that they've made some really bad mistakes along the way.
And it's
So
too late
why?
by that point.
And in some cases it's too late. Yeah.
So we can bring another animal into the mix here, can't we? You talked about hares and tortoises. The important thing is also to not be an ostrich, right? Because this is a temptation for human beings, isn't it? Is to not want to look at it. This is like, oh, it's just this is just. I want to go and live somewhere nice. I don't want to be dealing with all these issues, but it could cost you if you take the ostrich position. You want to be a meerkat. So be a tortoise and not a hare, and be a meerkat and not an ostrich. If I could reduce it to those animal archetypes.
No, but I think it's brilliant because it's true.
Right.
I think that's what human beings do when they're faced with issues that they find difficult to get their heads around. Right?
Yes.
They bury their head in the sand. They pretend the problem is not there,
Yes.
and then they haven't got the stress that comes with it. As
Yeah.
opposed to, rather than be reactive, I'm going to be proactive. I understand there could be an issue here. I need to address the issue now, rather when I'm in my deathbed and I deprive my children of their legacy.
There is that.
But it's too much to think about. It's too stressful. I
Yeah.
just ignore it. I think the ostrich is a perfect example of what a lot of Brits do. You'd be
Okay.
surprised.
We see it so much, Carl, and it's almost the same phrase every time. Say, oh, I know I needed to do this a few years ago. Well, I know, but I would just I didn't want to face it, or I didn't get round to it. And what we often forget as well, and is once we do this thing, then it's over. People may, oh, I don't, but you have to do it. Or okay, you don't have to do it. If you don't do it, you put yourself in a worse position. You
Yes.
should do it. Do it. Do your planning, and then you can enjoy the, Chiringuito, go down to the beach or whatever you want to do as an expat. But yeah, people should get it sorted.
All right. So key message then: don't put your head in the sand. Have a chat sooner rather than later. And presumably, if it is too soon, you'll just say so and advise people when to come back and start these processes.
Yeah, because they've already started the process by having that first conversation, and
Yeah.
we do have conversation, and I love it when people come to us and say, okay, yeah, is it a little bit early? No, you've started the process. We understand what you're doing. Okay, we can talk again in 6 months, but we have a timeline, and then we can follow it.
Superb. Excellent. Okay. Any other considerations then? So we've got the timing is everything. And not avoiding the issue. What else should people be aware of when it comes to relocation?
Well, Brits moving abroad to the Iberian Peninsula have to take into account the fact that we've Brexited, and they can't just land and pretend everything is the same.
Yes.
So if it's Spain or Portugal, you need your visas, yeah. And we know the CEF is moving very slowly in some respects. You need to make sure in Portugal, in particular, you've got the non-habitual residency regime in place. So that's Spain and Portugal, and then you've got the anomaly, which is the Gibraltar, which Brexited at the same time as the UK, and many Brits think they can just rock up on the rock, but it doesn't work like that, unfortunately. The law in Gibraltar still lumps British nationals as EU nationals. It hasn't been amended, and there's only specific circumstances and tax schemes which allow Brits to settle. Yes, if you land and you're seeking employment, that's not a problem.
Yeah.
If you catch a flight and you're planning to redomicile your company or work on a contracted basis, on a self-employed basis, yeah, from the rock, not a problem. But other than that, the old schemes like self-sufficiency and so on are only available under specific circumstances. So, I get this thing all the time. I'm Brit. I'm just going to fly across and I've got a property and I'm going to live there. I don't think it's as simple as that. Visas in Spain and Portugal, And in terms of Gibraltar, you have to make sure that you've got a trusted advisor by your side that can guide you and ensure that you do things properly and correctly, and you get your residency certificate.
Yes. Interesting. So you can't just rock up on the rock. I like that. And
No.
think things have changed. You can't. The old assumptions don't stand anymore. So again, seek advice on that. The details for getting in touch with Fiduciary Wealth Management will come up at the end of the podcast. Anything else? Yeah, you can't just rock up on the rock, and you can understand why people think that because it's an age-old relationship. But things have changed quite drastically, haven't they, in the last little while? And the implications of those changes are just continuing to filter through day by day, aren't they? And some of them remain uncertain, of course, as well, and grey areas still to be figured out. Anything else? I do have one other question. It's a little bit random and niche, but I'll try it. I'll try it with you anyway from an American listener to the podcast. But anything else that we can say about relocation apart from get in touch ASAP and sooner rather than later?
I think there's a lot to consider, Carl, and of course we can't include it all in this podcast, or we'll be here all day, maybe all week as well.
Yes.
And I think we say this every time as well, but I think it's worth adding. Google is incredible, but when it comes to this situation, Google is not necessarily your friend. And even worse, the Facebook groups are definitely not your friend because there's so much rubbish on there. And I as an expat myself, I'd be part of these groups, and you see somebody, thinking, oh, I can do this myself. I can do it for free. They ask these questions, and you can get 5 or 10 different responses, and some of the rubbish that's on there is so don't follow that. People are reluctant to get paid advice. But if you want to do things properly, and this is, if you're relocating and this is your retirement plan, you've dreamed of relocating for years, you're just going to do one big move to Gibraltar, Portugal, or Spain, why would you try and do it on the cheap? To me, that is madness, absolute madness.
Yes.
So don't trust Google.
You're like doctors then, aren't you? Because doctors say exactly the same thing. It's not just doctors, it's wealth advisors as well who are saying this. And I think the reason it's the same with human nature that we described before, people sticking their head in the sand. People often, I think, Google or use Facebook groups to get the answer they want. Not the answer they really need or the one that will be most advantageous to them, but it'll be like, oh, that guy who I've never met before said it was easy and I could do it myself and I don't have to worry about it. Okay, that'll do. That's the advice I'll take right now. And this is what happens. It happens in medicine and clearly happens in wealth management as well.
I think that's true, Carl. But imagine you taking the advice of somebody there, and then you go to Hacienda, the tax authorities in Spain, or the equivalent in Portugal, and they say, well, you haven't done this properly. They say, yeah, but John off Facebook told me I can do this. You wait and see what they say to you. Then that would be
miles away.
I would love to see that conversation. Yeah,
exactly. He's miles away. You'll never find him again. Okay, so there you go. Relocation. Fiduciary Wealth Management can help you with that. So you're listening to the Money and Finance for Expats podcast. We do this every Monday live at 10 o'clock, and you'll be able to ask questions live and speak to these gentlemen as we see here. A question that's come in from America. Biggest hurdle I'm discovering is that investing from the EU or even as a US citizen, but residing in the EU full time has huge obstacles. I'd imagine you would agree here. In the US or having a US address, the average person is easily able to invest in the the market mutual funds and or US ETFs, but not so if in the EU. There are loopholes, but not the kind available to the average person. Could you help this person? Could you help this predicament, Paul and Matt?
I think US ETFs are, there's a lot of platform providers that shy away from making US ETFs available because there's tax implications.
Okay.
So you'll find that they have narrowed down the universe and excluded some US ETFs. Not always. And then in terms of US investors, yes, it's difficult again because third-party providers and platforms are not prepared to open accounts for US nationals, again, due to tax disclosure and the implications of getting it wrong. But I think I mentioned in another show that we have potentially later in 2023, we may have some options available for US nationals who've got assets outside the US.
Oh, excellent. Okay, so by that you mean that the US expats coming to the Iberian Peninsula, or all US investors?
US nationals moving to the Iberian Peninsula who've
Okay.
got assets that they're taking away from the US, and
Yeah.
there could be some options in that regard. It's not
Possible.
a
Sorry. Go on.
potentially.
Okay. So
Potentially, it's not an area of expertise. You
yeah.
know, our focus is predominantly on British nationals, but there could be an option, an avenue for US nationals living in the Iberian Peninsula who need advice, so long as their assets are outside the US.
Good to know. So a possible advantageous investment vehicle. Keep tuned for that. Stay tuned and subscribe to the podcast. And we may have more to say that later on. Well, early next year, going into the new year, of course. Last words, and thank you very much for being here for the Money and Finance for Expats podcast, everyone. Last words then from Matt and Paul this week. We'll see you again next Monday, of course. But for the time being, Matt, key messages, please.
Yeah, I guess we repeat ourselves, but a failure to plan is preparing to fail. That would
Well,
be
hey,
the
excellent. And for you, Paul?
Don't be penny wise, pound foolish. Get good advice, yeah?
Okay, very good. And good luck, England, in the next round.
Absolutely, the French. So we look forward to that, yeah?
All right, superb. Thank you very much, gents. Looking forward to speaking to you next week already. And well, here are the details for getting in touch with Fiduciary Wealth Management. Of course, do send in your questions. We'd be delighted to answer those next week or in a subsequent episode. Have a great week. Bye for now. Ciao, ciao.
Thank you.